Hello, Dan Joss.
Hello.
Glad to have you here today.
I'm glad to be here.
So, bear markets.
A big decline in the stock market.
That's a big decline in the stock market. Someday we'll have to talk about why it's a bear market versus a bull market.
We've done that before.
We have.
You made fun of me.
I did. I'll make fun of you again when we talk about it again in the future.
Good.
But let's talk about actions to take.
Sure. Actions to take in a bear market. And by that I mean when your stock portion of your portfolio has declined, and we would assume it will recover in the future.
Right.
Because America is a great place to be.
Yes.
Look at your mix of stocks and bonds.
Okay.
Arguably, in a bear market, your stocks have fallen further than your bonds, if your bonds have fallen at all. You may consider what I would say right-sizing or rebalancing the portfolio by using some of your bonds to buy stock so that you have more dollars at work when the stock market recovers. You have more wealth had you not done that.
Gotcha.
So looking at the mix in stocks and bonds is number one. Number two is consider harvesting your losses.
Okay.
And this is for tax purposes. You could, for example, buy stock A after selling stock B at a loss. And if stock A and B are kind of the same, but not exactly, they'll both recover at the same time.
Nice.
And you'll have captured a capital loss to offset either future capital gains or a little bit of ordinary income each year. And you get to carry those forward year after year on your tax return until they're all used up.
Okay.
So we say we're making lemonade out of lemons.
Seems like a good plan.
Harvest the losses. Look at your stock mix. Consider a Roth conversion.
Okay.
This is where we move money from an IRA account, pay income tax on it, and move it to a Roth account. So if the stocks are down, let's say 20 or 30%, we're taking fewer dollars out of the IRA, paying the tax on it, putting it into the Roth account so that when those dollars recover, they're in an account where it's tax-free. So we get a tax-free recovery. And if it just recovers back to where it was before the bear market, that's 30% tax-free.
Right.
And arguably, it'll be in your Roth account until 10 years after you pass away. So your kids will have another decade after your passing of tax-free gains.
Well, that's nice for them.
And it's best to do it when the market is 30% on sale.
Okay. Yeah, I would agree.
Consider selling a concentrated equity position.
Okay.
So let's just say we've got a big pile of Apple stock.
Okay.
That's more than half our portfolio. If it's on sale like it is this year, you pay less of a tax. And if we could sell that, pay a smaller tax, and then put that to work in a well-diversified mutual fund or an index ETF or something else that's more diversified than a single company stock, then when the recovery happens, we'll have benefited in two ways. Pay a smaller tax and be in a more diversified position. So those are just a few things that there's other things to consider, but the difficult part of doing any of these things is the fear of the market that's down.
So maybe that's why they call it a bear market. Because, you know, if you're out in the woods and the bear is coming at you, they tell you to just stand still, but you're not really standing still. You're doing certain things, making adjustments to your personality and your stance and
I
stuff.
don't know. I've never been in the woods with a bear.
Well, congratulations. But you don't run away. You don't just say, throw your hands up and run away.
Yeah.
You take measured steps and precautionary moves to make sure that you're not devoured by the bear market. So maybe that's why they call it a bear market. Not so much.
Maybe so.
Okay.
Another thing to do is consider working with a certified financial planning professional.
That's probably a really good choice.
Because we know these things, and we know that a bear market will happen again. We've lived through several with quite a variety of clients, and we empathize with those people that have lost a good portion of their wealth.
Okay.
But we want to make, like I said, lemonade out of lemons, and we're doing these things proactively instead of reacting to what happens.
All right. You can make a bear market bearable.
And we kind of take the emotion out of it a little bit to make it easier to do.
Good. All right. What's the phone number?
Our phone number is 757-903-2127, and our website is jossbrown.com. That's JOSS Brown.com.
All right. Thank you so much.
Thank you.